Hey traders, this is Christian Frommhertz, CEO of Tribeca Trade Group with your weekend video. And we're going to cover a lot in this video today. We're going to do the whole macro review. We're going to talk about equities, bonds, gold, VIX. We're going to talk about what's going on within U.S. sectors. We're going to look at where the money is going. Is it still going into international equities? What's going on in the U.S.? Are bonds starting to attract some money? We're going to talk about a lot of the noise and some of the headline risk in the market, this week's events. And then we're going to also bring it back to individual names, which I think are most important right now because it does remain a stock picker's market. And we're going to talk about, I'd like to talk about the 10 best option signals from the week, but I think it's going to be a little bit more than that. So I'll have to go through this at a quick pace. So just quickly, a review of last week. It was an odd week where you see bonds and gold up as well as equities. Some really interesting movers with small caps up 1.6%. The sentiment got really bad in small caps, and I think they surprised some people at the end of the week, moving up. I think first of the month flows were partly responsible for that. We saw a lot of money going back into small caps. So I'll go over all that in a second, and I'll go over some of these charts. But, just right off the bat, what I want to talk about is this market really remains a stock picker's market. There's individual names that are really showing a lot of strength. You really have to kind of weed out uh, the media in terms of what they're talking about. I think there was a lot of notes about the four stocks, the FANG stocks, making up a lot of the returns for the market, or that's where the strength is in the market. I don't agree with that at all. I see a lot of other pockets of stocks that are doing extremely well. You look at the 50, this is not a 52-week high list, but a short-term high list, which I comb through just about every day, and we just see a lot of different groups that are breaking out. A lot of the consumer goods stocks, a lot of the of course, the tech, the semis, and so forth, but a lot of casino names, a lot of rail names, a lot of restaurants. The tech, I mean, look at the list of technology, and it's a lot of smaller groups within technology. It's the semiconductors. It's a lot, this is scientific and technical instruments. The list kind of just goes on and on. Internet names and so on and so forth. So this market's got a lot of strong market breadth. Does it mean that every area of the market is breaking out? No. Energy stocks got crushed last week. The XOP was down 4.5%. The banks also look troubled. I shot a video last week talking about how the bank weakness doesn't necessarily mean that the global market is getting weak. There's other things. So that was a video that I shot last week. If you didn't catch that, I think that was I want to say I think it was Wednesday night's video where I went into some of the structural issues with banks. I have experience from coming from a bank and kind of seeing that world change from the time that I was there in my experience. All right, so we're going to talk about sectors. Let me talk first about the major indices and so one thing. Sorry, I'm getting ahead of myself. The one thing that I want to talk about, besides the U.S. names that are breaking out, and where I just showed this spreadsheet of various different individual names, the story again just continues to be the global rally. And this is getting very little attention. I talk about it every week because it's just, this is something that I watch as a macro investor, but it still gets very little attention. Besides the major markets in Europe and Asia rallying this year and outperforming the U.S., I mean, look at some of these smaller areas: Poland, Turkey, South Korea. I mean, they're up 35%, 29%. Greece up 25%. Which is the GREK ETF. Sorry, that's not in there. But the outperformance is really way surpassing the U.S. this year, some of these international areas. And the ones that I mentioned are not one-offs. I look at 39 different international countries and regions, and of those 39, 31 of those are up over 10% this year. So the S&P is up 9.7%. We are really the U.S. is really underperforming. So you continue when you turn on CNBC, or even Bloomberg, they will continue. They'll have somebody on talking about, oh my God, the Trump rally is in danger here. It's These guys are, I use this in my newsletter this weekend. My view about these guys is they're absolutely clueless because, first of all, they're not looking at any of the international markets because the U.S. there is no Trump rally. The U.S. market has underperformed drastically a lot of international areas. And not only have these guys who continue to be on financial media, they've missed the global rally. So they've missed out on what's happened this year, and they still can't identify it. They're still talking about the Trump rally or the Trump trade. I think I cannot believe how these guys are on TV and they keep bringing more of them out. So it's really alarming that you have so many people who are so focused in on just U.S. equities and not seeing the bigger picture. So, I'm not going to throw up and throw up a winning flag and say, that's it. That's what the market is doing for the rest of the year. If we look at the VIX right now, it is a 9. It's below 10. It's a 975, which is close to a 52-week low. So usually when this happens, when we get this low in market volatility, the market obviously just doesn't go up in a straight line. I think a lot of things are pretty overbought. So I'm going to go ahead and start looking at a couple of the indices. SPY, I usually look at the RSI to tell me if things are overbought. You could see that basically the last 2 weeks, we've had just a huge amount of up days and very little down days. So next week, we've got a couple macro events. Or a couple headline events, as I call them, maybe noise, I would say, because sometimes this noise or headline risks creates some short-term volatility. So I think that we might see volatility, the VIX go higher into Thursday. Thursday, you have two things. You have Comey testifying, which I really don't like to pay attention to these things, but to completely ignore them would not be the best thing either. So you've got that, and you've got the UK elections on Thursday. So usually into events that the market is kind of has in the back of their mind or anticipating, usually we see the VIX start to move up a little bit. So, looking at the Qs are back to overbought territory. For a while the RSI was well over 70. Now it's about a 78. So we're definitely overbought here in the Qs, even though it was basically, just a couple inching up days and then a blast off on Friday. So I'm a little bit wary of that. I'm not closing any of my cash positions. My cash portfolio is a trend portfolio. I don't adjust them. They stick with the trend. Once they break support, then I take those positions off. But for options, it's a little bit different position. We trade both options and regular stocks at TTG. And for options, you have to be a little bit more cognizant of levels, volatility levels, and if we're getting a little bit overbought, because you have a couple of days pullback and your option premium kind of gets blown out. So that's something to be cognizant of, and taking some money off the table, I think is a good thing to do right now. My longer view, or my view for the rest of the year, is bullish and up. But it doesn't mean that you can't be aware of when we get overbought and when volatility is extremely, extremely low. So the VIX, again, looking at this thing, every time it spikes, that's usually an area to kind of start putting positions back on. And we're right back to where we were before this big spike up in volatility. So, just be aware of that. IWM, I'll go to that next. IWM very positive last week. You got an MACD crossover, first green bar in that. Let me zoom in a little bit so you can see that. So usually I like to wait for the second day because sometimes these beginning crossovers, sometimes they can reverse. But really the level to watch is 139.12. So I'm not really in any of the major indices. Like I said, I'm more playing to what's been going on in the market, which is stock picking and finding particular groups that have momentum. So that's more or less how I'm trading. I'm not trading the major indices, but I think IWM looks most interesting to me right here with support at 139.12. All right, so that's the major indices. Let's look at TLT for a minute. Let's look at bonds. They had a real nice week as well. I mentioned bonds and gold were both up on the week. A couple charts to kind of look at is a long-term chart in TLT, and we talked about this a couple of weeks ago. If you take a longer view at bonds, you could see that they did move down, but basically just into a long-term trend line. And then also you look at this 200-day price taking out getting back above the 200-day moving average. If you're long a lot of equities like me, or have a lot of equity only exposure, I think going long bonds here versus, I mean, this is easy. This is an easy trade because if you know exactly where to get out of it. So we're above the 200-day moving average. If we get back below it, then I take the trade off. But I think giving it a shot, it's just classic trend trading. Same thing with gold. Since gold has broken above the 200-day moving average, it's really been moving up here. So, you could debate and have your own opinions about what gold is going to do, but I think above the 200-day moving average, you want to be long. If it gets back below it, then I would say neutral or out of it. So that's my view on gold and bonds. And again, having a little bit of these things in your portfolio is really good diversification because they're mostly uncorrelated to equities, and that's good diversification benefits for a portfolio. So I like either one of these right here. I like bonds. I probably like bonds a little bit more because you just have it going over the 200-day moving average. It's not really a stale break above the 200-day. It just basically happened, and I think that is a good trade to look at because again, you can get out of it if it doesn't start to work. So moving on and looking at sectors. And again, so my strategy going forward, before I go into sectors, is which I think I've already said. Just be wary of a few of these headline or noise pullbacks. They have been great buying opportunities whenever that happens and an uptick in volatility. Something that really doesn't affect any companies. Going back to why I am bullish. Well, first of all, the trend is up. No doubt. But I've also, looking at every day when companies report, it seems like we're getting a lot more names that are really beating to the upside. And if you go back from a couple of years ago, what was happening was companies were beating on the bottom line and then missing on the revenue line, on the top line. A lot of the bottom line is because of maybe a little bit of financial engineering going on. That is not the case what we're seeing this last quarter. We saw a lot more earnings beats, not only the bottom line, but also on the revenues as well. So that's much different. And you can't ignore that. I think you just can't ignore that's taking place right now. And in multiple sectors that happened last quarter through earnings. So again, that is why I'm overall bullish, but I want to be aware of headline risk and also us getting a little bit overbought. It kind of tells the same story here in sectors. The last time I did my newsletter, you could see that the breadth was kind of, we had more sector. We still had more sectors that were strong and above the 50-day moving average and the 100 and the 200, but you had a bunch of them kind of in this middle area and two of them being avoids. This is a little bit different. You take a look at how this looks now. And what did I say? We've got 9 sectors out of 11 out of the sector S&P sector. These are the S&P sectors, the GICs. 9 out of 11 are above the 50-day moving average. This is really strong and broad market breadth right now. The one thing that has me a little bit concerned is the momentum. We have a momentum indicator at Tribeca Trade Group, and they're all, you could see that the highest rating gets to a plus 12, and you've got 1, 2, 3, 4, 5 sectors that are plus 12, and a couple that are plus 11 and rising. They can't really get much hotter than that, which tells me they're at the upper spectrum of being kind of overbought at this and momentum running a little bit too hot right now. So that isn't to say that this is bad, but just be on the lookout for, again, the market ebbs and flows and it doesn't just go straight up in a straight line. So I would be a little bit cautious that we're running a little bit too hot. Every sector, and again, like I mentioned in the beginning of this video, every sector is not strong. You've got energy, way below the 200-day moving average. The financials continue to be kind of trapped between that 50 and 100-day moving average and the 200. So financials, I really don't want to be a part of. I've said that over and over in videos. I don't need to be long them. That's very easy. Same thing with energy. There's short opportunities, I think, right now in energy. It's kind of difficult to short right now. There are going to be days where we correct, but it's awfully hard to find names that you're going to be very exact to pick a day where we're actually going to where we're going to decline in an uptrend. So I would rather just avoid these right now, and rather than basically short, just not have any longs in energy. So, looking at what we do every day is read the tape. We look at aggressive call activity. There's been a lot of aggressive call activity in energy. I don't care. I don't have to take those trades. If they go up, that's fine. If they go up in a counter trend, that's fine. There's plenty of other names for me to look at. I have a trading system, which I hope most traders do. And that trading system right now tells me I don't want to be in any energy names that are especially below the 200-day moving average and breaking down. Just my system. Again, there's other places to look. So that's what I see for the sectors. Just a quick ETF flow review. Just to give you some exact numbers. Yeah, there's more money that continues to go into international equities. We did a nice review of money flow for the month of May, and international ETFs dominated in terms of the amount of money, new money that they're seeing right now versus the U.S. U.S. continues to be more of a rotation in between sectors. You could see consumer staples, materials, which include gold miners, utilities for the whole week saw inflows. And you can see financials, which saw a lot of outflows for the month of May. I think I have that number in here. It was $1.2 billion for the month of May of outflows. Also energy, so the weaker areas are seeing outflows. That shouldn't really surprise anybody. And some of the defensive areas, which I think consumer staples, utilities are seeing inflows based on the move in interest rates, right? So as interest rates go lower, there's some equity plays that become more in demand because of their yield. I'm looking over at international. It's almost the same thing every week. International developed markets. So your EFA ETF, your VEA, your IEFA, they continue to attract money. Emerging markets, same thing. And Europe. You keep in mind, Europe saw just, I'll use the word colossal here. Colossal inflows in the month of May. It was $4.7 billion that went into European ETFs. So that trend continues, and that's basically that May. We saw other months with inflows, but May by far has been the biggest month of European inflows. So I'll go back to that global view that I mentioned before, and there's a lot of other things going on besides in the U.S. market. Just looking at the biggest inflows, I mentioned fixed income. Fixed income saw $4.6 billion of inflows last week. That was not all treasuries. That was also investment. So corporate bonds, LQD was actually saw the biggest inflow of any ETF last week, $1.1 billion. And then besides that, high yield bonds, JNK, SJNK, HYG, they all saw inflows last week. Treasuries saw net inflows. There was a little bit of change of duration there. 20-year TLT. That saw 565 million. I got a number of typos in here. Apologize for that. IEI, which is 3 to 7 years, also saw inflows. 7 to 10, for whatever reason, saw outflows of 323 million. And then finally, gold saw a little bit of inflows. GLD, 149 million, and IAU, which we already talked about those charts. So I want to get into a couple of the charts of the week and some of the option signals for the week last week. This is a trade that I've been in for a long time, which is the ITB ETF. This goes back to a couple months ago where we saw a lot of January. Let's see if I can find that for you. A lot of January option flow in ITB. First of all, what is ITB? It's the home construction ETF. It's a little bit deceiving to hear it called home construction. It's mainly home builders. It's 62% home builders. There is a home building ETF. It's XHB, but again, it only has about 30% home builders. Just the names are a little bit off. Again, you always want to look to see what companies are in these ETFs because sometimes it is a little bit deceiving. So ITB, 63% of home builders. If I go to the open interest in January, you'll see what I mean. So just give me a second while I bring this up. And I want to be able to see a few more strikes in here. But again, this was going back from a couple months ago. You could see the open interest on the January 2018, 35 and the 38 call strike. You could see they've got about 100,000 a piece of open interest. So this was established about 2 or 3 months ago. So I've been long ITB since then. And then it's good to see we just saw on Friday two big trades going up in similar places. One was in the ETF itself. These were the July 33rds. And then we also saw a big chunk of all the way January 2019. So it really makes you, just as I pointed out with the ITB January options, these are the trades that, there's all different types of trades and option flow that go up, but I like the longer term ones because someone is looking at the trend and they're thinking it has more to go. So, of course, we're going to look at the technicals and make sure that checks out, but the fact that someone's putting down a pretty decent chip and going out to January 2019, a $3.4 million option bet tells me that they really like the name. They think it's undervalued, and then we can check out the charts to see if it lines up the way we want it to. But here's the ITB chart. Notice it is one of the best performing sectors in the U.S. year to date. I think it's up about 20%. Sorry, 21.5% year to date, but it's mainly been going sideways or consolidating for the last couple months. It might be due for a breakout. So I don't know if that's going to happen, but it looks like some volume started to pick up here towards the end of the week, and I like the bullish option play on home builders. So I'm long here, and I am looking for a breakout. Notice that in this consolidation, we never really broke this purple line, which is the 50-day moving average. We look at Lennar, just going back and looking at a really long-term chart, or like 12-year chart here in Lennar. Notice that it's got a ways before it hits that all-time high. That's at $60. They purchased the 55 strike in Lennar, so they're looking for perhaps that the price to get back to the all-time high, or at least close to it, which is the 55 strike, which is under 60. Then I've also got a chart up of Toll. Why do I have a chart up of Toll? We haven't really seen any aggressive call activity lately, but they did report earnings a couple weeks ago, and it was one of the if you listened to the call or if you saw the highlights from the call, it was one of the most bullish uh, calls that Toll Brothers has ever made. They said that they're basically seeing a lot of strength in the luxury housing market, and especially where they're positioned. So I don't think that the whole, this is my opinion, but I don't think that the whole country is seeing it. I think I heard a report that San Fran on the super high end is starting to come down. But hey, these home builders, they probably know that. They know the market obviously much better than I would, and hopefully they're positioned correctly for those areas that are growing in the U.S. So also, I wanted a couple in here. Home Depot has not had any unusual or aggressive call activity basically since they reported earnings, which was here. But I think this is a name that has been in an uptrend for a while, and every time it kind of sits down for a little while or consolidates, in the past has been a great buying opportunity. So I structured a trade on Friday. It's kind of short term in nature. It's the July 160 calls, and I've got my defined support. Where it won't work is if it breaks this 154.25 level. So it just got into the valuary for the month of June, and I'm going to stick with the charts. Hopefully, we see some momentum call buyers next week come in. That would be really lovely. But we haven't seen the call buying. We saw a bunch of call buying before earnings. We just haven't seen it in the last couple weeks. So I'm speculating a little bit, and I also like the support in the chart at the 50-day moving average. Next on the list, just looking at a couple other sectors that are breaking out. Again, this is a longer term chart in healthcare, XLV, breaking out to the upside. KWeb. So this is the Chinese internet. I've been all over this trend this year. Since a bunch of names have had earnings, the KWeb ETF, which got very overbought, has kind of come in and has been consolidating a little bit. I like the fact that it found support at the 20 period moving average, which is the light blue line on my charts. So I went long this towards the end of last week on this support. It's this. So again, I'm kind of sticking to things that have really outperformed and have done really well because I think the trend has a chance to continue. I'm not going to try to call a top and a trend, but year to date, these are up 37. This ETF is up 39% year to date. So on a little bit of a pullback here, burning off some of these overbought levels, I think it's still a bit overbought on the weekly chart for KWeb, but I like the support at that 20-day moving average. Again, if it doesn't work, I know exactly where to get out of it. We'll go to the weekly chart here just for a minute. And you could see that it's still a 76 RSI. I mean, this thing was really cooking. It got way above 80 on a weekly chart. So we'll see how that shapes up for next week. Just further just hammer the point here with non-US equities. This is the chart of VEU. This VEU ETF, you can see this big green bar here and the pickup in volume here. It saw $551 million in inflows last week. So not that I want to get into this ETF right here, but I'm already long European stocks. But you could just kind of see that what the global trend is right now, which is up and to the right. TLT, we already covered that one. Like I mentioned, I'm going to try to go over a couple. This video is now 24 minutes, so longer than I wanted to go. But in terms of unusual or aggressive, I like the term aggressive call option activity better. Starting from last week, a couple charts we already talked about. This one, Caesars. I'm not going to go over the chart, but big move last week. We've been seeing call activity for the last couple weeks in CZR, another casino name. Apple. Also saw some call activity last week. It finally got going on Friday. Got a nice bounce. This was a name that I got into a couple times last week, into and out of basically, and don't have that much on. But you could see the consolidation. Let me bring up Thinkorswim here in Apple. So after earnings, let's just take this down from a weekly chart. After earnings, it basically made that next move up higher, but last couple weeks it's been consolidating. Looks like it might want to take that next move higher there. I would watch 156.39 as your resistance, and then of course on Monday they have their developers conference, which is Monday afternoon. So another event to watch for next week. Besides that, there was a nice trade in SGMS last week. Scientific Gaming, another casino name, SGMS. I don't think I have that one highlighted, but just kind of came to mind. Real nice trade going, again, longer term trade going out to January. January 25 calls, 8,000 of them traded last week. A couple other names that I have my eye on. I talked about the rail strength, UNP. So real nice August play. Small amount of contracts, but you could see, if I could find this trade. Well, I can't find it right here, but you could see it was the August. Oh, that's because I got the wrong symbol up. That would help. So these were the August calls. Notice they purchased these for 530. So it's $360 option premium. It's a pretty good looking trade. We've seen what happened with NSC and CSX on aggressive call activity. UNP might be the next one to go here. So keep an eye on that trade. We saw a little bit of PF after CNBC kind of said that the deal is unlikely to happen. We saw a dip buyer come into PF for July. HA is another airline that I think I really like. Really like this chart. I actually put this trade on. Notice the bottom of value. Notice that it found support. If I scale back here a little bit on the 50-day moving average. So you can see you got nice support. Actually, I'm sorry, that's the 200-day moving average and the 50-day. So real nice support there. I went long HA on Friday. I'm looking for a move, and I love all the support lining up here. So that's probably one of my favorite trades from last week, including the home building. The scientific gaming is up there as well. I like the UNP trade. We saw some BABA calls last week. We saw a lot of plays on some biotech names, something that we really haven't seen too much of. Spotty activity the last month or two, but started to pick up with biotech. Big outperformance last week was up 5% in 2 days last week. Celgene is another chart that I like because it's got some nice defined support in Celgene. Not a name that I've played in a long time, but you can see that 200-day moving average. So maybe this thing starts to wake up here. Obviously a big move up and then consolidation here for a good couple of years. So I'll leave it there. There are a bunch of other option signals, but if you're a member of Tribeca Trade Group, we go over them more in detail. So thanks for watching today's video, and have a great weekend. Thanks.